Danny Charity here today, and I will explain in a moment who we have here with us today. So, first of all, from all around the world, from both Israel and the US. So, Dana is in Tel Aviv, Lindsay is in Connecticut, and Julia is in New York City. So, I think I got that right. And a very interesting discussion today with a fund led by very interesting partners that all were leading Amex's investments, which is very interesting in the fintech world. So a couple of words, and then we'll start our discussion about company capital. So we'll not talk about company capital, we'll touch it in a second. A couple of words about our speakers today. Lindsay Fitzgerald, general partner and co-founder. I mean, all of you are general partners and co-founders of the early stage venture capital that we're talking about today that focuses on fintech, commerce, and enabling infrastructure. Was previously managing director at Amex Ventures, where she oversaw B2B fintech investments and portfolio business development initiatives. Led 20 fintech investments like Plaid, Melio, Coast, and Next Insurance, and has served on the boards of a number of her portfolio company. Both a fintech investor and operator, previously spent several years in business development and strategy at American Express and investment banking at Morgan Stanley, which is why you work closely with portfolio companies on efficient go-to-market strategies. Before that, growth equity investor at HealthCore Partners, a healthcare-focused VC fund in New York. Dana, who's in Tel Aviv, leads the firm's investments in fintech infrastructure and enterprise software. Previously served as managing director at Amex Ventures, where she led the enterprise capabilities investments vertical globally and headed Amex Ventures activity in EMEA. She's involved in boards of numerous companies. Some of them I see here, like Voca, that was acquired by Snap, or Simply, that was acquired by Flywire. She joined American Express in 2012, held innovation and business development roles in New York prior to joining Amex in Palo Alto. And before that was an associate at Task Consulting and Capital, Israel's largest management consulting firm. I know that. Julia Huang in New York City leads the firm's investments in consumer and blockchain-enabled fintech. Probably some of you know that we have been probably the first and probably only family office group that dealt very seriously with blockchain. I'll talk about it at the end of our session. Julia was previously managing director at American Express Ventures, where she led 22 investments in fintech, starting with category-defining companies like Stripe and iZettle, before specializing eventually in consumer and blockchain-enabled fintech. We have, by the way, the head of blockchain at commodities at Bloomberg at the Miami conference. We have the head of blockchain at HP and Microsoft and others at the New York conference, and we have an amazing panel led by women in the blockchain world in London on the 22nd. Julia was born in China, grew up in Australia, and spent her adult life in Europe and New York. She has a deep appreciation for the pain points of financial access globally, and loves partnering with founders who use technology to democratize financial services and streamline its inefficiencies. One of the companies you invested in, by the way, Julia, is a very good client of ours, and which we know very, very well, Abra.
Oh, yeah. We love Bill.
I just wrote Bill. Hey, Bill, you know who is on my program here the next day. Anyways, good morning, good morning and good evening, Dana, from Tel Aviv. How are you all doing today?
Doing very well. Thank you.
Great. So we want to hear how company capital came about. I have a feeling it has something to do with Amex, but it's just a wild guess. So how did that start? And when did that start?
Yeah, thank you. Thank you, Danny, for having us. Good morning, afternoon, evening, everyone. Really, really grateful for this opportunity to be on the DC Finance platform. We're so honored to be here and to be able to introduce Company Capital. My partners, Lindsay, Donna, and myself, as Denise mentioned, are the three founding equal GPs of Company Capital. And yes, we met at Amex and spent the better part of the last decade at Amex Ventures, where we were working together to help build it into the preeminent financial services corporate VC that it is today. And by the time we'd left, we had invested in 55 companies between the three of us. We've achieved top quartile results for similar sized funds. We built a team of 15 people and a full-fledged in-house sort of public company compliance and reporting operations on the back end as well. So, our backgrounds prior to coming together, you've heard about. It's sort of very preeminent firms in financial services, a lot of training at Wall Street, management consulting, top tier, top brass firms. I will just mention that, Donna's one aspect of her background that was a little amiss from her bio was that she also spent 7 years as an officer in the Israeli Elite Intelligence Unit 8200, doing deep tech product research management, and then before her management consulting, which is for those in the know, that's 5 years more than the mandatory. So she really loved tech, really loved what she was doing, and that depth of expertise really infuses what we do day to day. And so grateful to have her in Israel, bringing that institutional trust, enterprise level SaaS as part of our offering at Company Capital. But yeah, we spent the last decade working together. We, you can see from our backgrounds that we're not only experienced operators, but trained with the best and best in business model and financial analysis and assessment of risk returns. So we don't see that in very often now in early stage VC managers coming to the market. And I think our backgrounds and the way we fill in each other's strengths and weaknesses and gaps are why we've been able to deliver such consistent results for the last decade, along with, the support of our team, obviously. But as the market sort of fought for fintech investor talent last year and the year previous, each of the partners here had multiple offers from other funds, other financial institutions to start their corporate VC practices and lead them. We all know that the secret sauce lies largely in the group of this unique set of talent here, and our collaboration, our ability to make decisions together, pick and contribute to the outsized alpha far outweighs any brand equity of a larger platform that we could be at or were at. And so we've been privileged enough to have offers from those institutions, but we ultimately, said no to the money and those platforms, because we really believe that, this group of women, pedigree of excellence, love to win and hate to lose, that in our eyes, while we're shedding the Amex brand and some of the advantages that brought with it, the independent vehicle that we're forming now far outweighs any, but by a good factor, those things that we're letting go of. And this unit, we're going to build a long-lasting platform for the long term.
And anybody else wants to address this question, or?
I think well said by my partner.
And Donna, you worked at Amex where?
I worked at Amex initially in New York, then spent a few years in Palo Alto, and then ultimately moved back to Israel because we're investing in a lot of Israeli companies, and it just made sense to kind of build out the operation here. So I moved back to my to my homeland about 3.5 years ago.
So you all met in New York, or
yes?
Got it. And so let's talk about the work you've done at Amex. Your experience and track record there. I know that there were several firms that were acquired. I'm not sure if one was listed eventually. I think so. But anyway, I'd love to hear about that.
Sure. So at Amex, over the last decade, we managed balance sheet capital, which we invested into early stage companies. And we tracked these in 2 5-year cohorts. So we'll call it Fund 1 and Fund 2, roughly in 5-year cohorts that were largely 120 million deployed capital of each fund. So as you can see, we tried to mirror that for Fund 3, if you want a company capital Fund 1, but basically Fund 3 for us that we're managing, you round through for management fees and all of that, and you get to a fund size of 150. So, we invest in 55 investments across those 2 funds. We generated 7.8, return on Fund 1. And Fund 2 is over 3x, high 3s, tracking really well to hit the same as Fund 1 at this point. And the one thing I want to highlight about the return on our portfolio is that because of the way we like to invest and how we underwrite, we have a very low loss rate that's very, I would say, anomalous to venture, right? We have 8% in Fund 1 that returns 1x or less. Usually you hear a third, you lose a third breaks even or achieves some sort of like mid-range, and then you have a third that outweigh the rest of the portfolio. We've really had to hone that muscle because Amex was a bank holding company, which meant we had ownership restrictions. And so everything we batted at had to return a certain amount in order for us to hit top quartile returns. That combined with our background, our training, was what really helped us pick outsized winners at a consistent rate.
And by the way, the other firms, the other competing card companies, they also have a venture arm. What do you think? Do you think there's anything that distinguishes Amex versus other players, like, I don't know, MasterCard and the other guys?
Yeah, I'll jump in and answer that one. I'd say like the corporate venture capital landscape changed a lot over the last 10 years since we started Amex Ventures. It's part of actually why we're building company capital, which we think is sort of the next gen version of all that, which we'll get into. We're one of the pioneers at Amex Ventures, right? When we started it, there were a few dozen corporate venture capitals funds across any industry. Fast forward to today, there are hundreds of corporate venture capital firms, and everybody's jumping in the fintech corporate venture capital game. Like if you're a public company with valuation of 20 billion or more, you have a corporate venture capital arm. We're even seeing startups launch corporate venture capital arms. We think that is like a pioneering, super innovative model for the last decade. And we also think it's time to innovate on that model, right? Now, if you're an entrepreneur, now you've got to choose between 20 corporate venture capital firms to, find the partner to add value. Actually, what we've done in company capital, just having seen that trend, is we sort of got together and said, this is getting crazy. There's just too much of it. Let's leapfrog this model and create the next generation of what this sort of strategic add value corporate venture capital looks like. And so actually, what we've done with company capital is created almost like a multi-tenant corporate venture capital fund as part of our value prop. We have actually strategic LP relationships with like 5 or 6 big financial institutions today. That number will ultimately be somewhere between 8 and 10 when we finalize the full fund. And actually what we do is we can say to startups now, you don't have to pick 1 or 2 corporate venture capital funds as your sort of strategic add value partner. You work with company capital, you get access to our team of fintech specialist investors, and we have a network on the back end of strategic corporations who look to us to do that corporate venture capital thing with them, right? We can be their curated partner to scour the venture capital ecosystem, find what we think are the most compelling fintech startups out there, and we can help them think through partnership opportunities that add value to both parties. That's sort of our secret sauce in the back end, which we can get into a little later as we talk about our differentiated value prop of how we've leveraged what we've learned in building what we think is kind of the best in class and one of the first corporate VC funds in fintech, and how we've applied that to sort of the traditional venture capital model to create sort of a super fund that combines the best of both.
And for those of you who don't know, you mentioned Dana was an 8200 unit, which is it's probably the most secret top tech group in the Israeli army, and many top entrepreneurs came from that area, like Checkpoint, if I'm not mistaken. I think he's from 8200 and many others. So my next question. I was in the education part of in the military. We did things that were less secret, way less important, but we were proud of all of that. I was in charge of the films in the army, so it was important to bring films. I did that. So anyway, a lot of new funds have launched this year, obviously, after COVID as well. I'll touch that later on. I would like to see how that affected things. But first, what's your differentiated value proposition? Why did you decide to focus on fintech?
Yeah. So I'll take that one. So yeah, venture has been extremely competitive in the last 18, 24 months. We've seen tons and tons of new firms come to market, old firms come back and raise, increasing fund sizes. And so as we thought about launching our, kind of first independent fund here, that forced us to put some serious energy behind building a differentiated fund strategy and value proposition that would enable us to find and win the best deals, and also give our portfolio companies kind of an unfair advantage in the market and sort of ensure our own success to some extent. So before I cut to the chase and tell you what those value prop, what that value prop that we've created is, I'll provide a little context for how we got there. We started with research. Right. The benefit of having two funds under our belt at MX Ventures is we had a group of 50 awesome fintech founders that we could survey and talk to, and actually, base our fund value prop on real market data. So we talked to them. We said, what's working for you with your current venture capital investors? What's missing? What do we do particularly well? And at the end of the day, we landed on this point of business development, right, for fintech. Fintech is a really unique sector. Back when we started investing in fintech at the early part of the decade, the thinking was fintechs are going to take down the banks. All right, they're going to be the banks of the future. Fast forward, that has not happened, right? If you look at the value caps, the market caps of fintechs and traditional old school banks, they've grown together actually. And this is really a unique insight and a market trend that we've been kind of a fundamental part of for the last decade, right? Fintechs cannot survive without sort of the bank pipes and the regulatory infrastructure that they've created over many, many decades. On the flip side, banks can't keep up with the pace of innovation that their customers demand, right? Like they have to partner with fintechs in order to deliver on those new expectations. It's funny, we get a lot of, launching a new fintech fund, we get a lot of, isn't fintech done? Like, haven't you, there's so many big fintech companies. And I always, ask people, when's the last time you went to a bank and walked out and said, well, that was just an amazing, amazing experience, right? There's a long way to go on the consumer side, on the B2B side, and on the infrastructure side of fintech. And so anyway, we kind of leaned into this kind of partnership model. And we said, okay, how do we create a really compelling fund value proposition that centers on that business development capability? Because we've seen time and time again that the fintechs that are able to tap into that kind of incumbent financial services ecosystem, they can scale faster, more efficiently, and at a bigger scale than those that don't. And so that's kind of the core insight that we wanted to tap into. Lucky for us, we have lots of experience in helping our portfolios access partnership opportunities through our platform at American Express, right? We invested in over 50 amazing fintech companies there, but after investing, we work with them all to get partnerships. And we actually have experience in launching over 100 fintech incumbent partnerships in market. That gives us really unique insight and background that we bring to company capital to be able to do that same go-to-market motion for our portfolio companies now out of the new fund. So we mentioned this a little bit earlier. We think that traditional corporate VC model that we were a part of at American Express Ventures It's a major venture capital innovation over the last decade. It's why it's been replicated by every financial services firm out there. We think the next decade of innovation is what we're doing here at Company Capital, right? Leapfrogging that single corporate VC model to create sort of a consortium strategic fund. A portion of our LP base has been allocated to these strategic partners. We work with them to help them curate innovation, source partnership opportunities, all, of course, to the benefit of our portfolio companies as well, to sort of ensure our success. We're really kind of a first of its kind model in fintech. So anyway, that's the very thorough background. But really, when we think about our core fund value proposition, when we talk to startups, one, we are fintech specialists. This is all we do, right? Fintech is a multi-trillion-dollar market, and there's significant innovation continuing to emerge. We've been immersed in that industry for the last 10 years. We know where the problems are. We know where the bodies are buried. And we have access to a lot of privileged information just about the inner workings of the industry that we can use to help us hunt in the right places, help us do more thorough and also faster diligence than a lot of our competitors, and build kind of best-in-class companies alongside the entrepreneurs in our portfolio. So that's one, right? Specialization we think really matters in fintech. Two, we've got an unmatched network. We are a small fund, small in size, small in team, but we've got access to dozens of advisors who work with us behind the scenes to help us punch way above our weight class. That includes founders of many of our previous portfolio companies who help us source, amazing companies through their own kind of friend and entrepreneur network. Also includes industry veterans, former presidents of major financial institutions, chief risk officers, et cetera, who help us diligence companies in these really niche areas and also add value from an advisory perspective on the back end to our portfolio companies. So that network's been extraordinarily helpful. And third, as we worked really hard to launch this unique kind of biz dev oriented value prop that's custom built for fintech, right? That network of strategic financial services companies that we have as part of our LP base enables us to go to founders and say, we're not just capital, right? We may not be the biggest check on your cap table, but we are probably one of the most helpful checks on your cap table. We're your first business development partner, and we've got access to this amazing group of companies that can really move the needle for you. And so when we write term sheets, it's not just numbers, right? We write a term sheet for the company, and alongside that, we always deliver them what we call a strategic letter of intent. This is something that's proprietary to Company Capital, where we outline our vision for the company, how we plan to add value, and the network that we're going to bring to bear for those companies. That document and that network enables us to win deals at an outsized rate. And I'll note, we don't just win on valuation, right? Like there have been plenty of deals where we get access at actually lower valuation than some of our more established peers because of the work that we do and the intent to kind of roll up our sleeves and build with our portfolio companies. So we're proud of having built that, and we know that biz dev, based on the research we've done and our early experience with our portfolio, is incredibly meaningful to help build kind of this next generation of foundational fintech companies.
Thank you. Now, how do you define fintech and key focus areas that you'd see in that vast world?
So I'll take this one. So we actually define fintech in kind of the broadest sense you can probably imagine. I think kind of the key aspects are usually the consumer fintech and B2B fintech, but we go even broader than that. And we look at technologies that are enabling commerce. We look at the infrastructure layer, meaning things like cybersecurity, data, compliance, risk, fraud, all the enablers that really help financial services to actually operate. Kind of another way to look at it, as we look at it from the lens of different software products, capabilities that actually target financial institutions and or fintechs as their key customers. So that could be digital transformation, it could be AI applications, customer experience, customer service. It's very, very broad, actually. And the reason we can actually look at all these subsectors with a lot of expertise is each of us has their own domain expertise, like you kind of mentioned in the when you introduced us. But Julia does a lot of consumer fintech and a lot of blockchain. Lindsay focuses a lot on B2B fintech and commerce enablement. And I look a lot at kind of the fintech infrastructure and enterprise software for financial services. And that kind of allows us to, have domain expertise, have very informed conversations with founders and make very informed decisions. The other thing that is super important to note, we're very much thesis driven. So when we source companies and evaluate companies and make investments, we're driven by kind of key themes and key thesis areas that we think will have outsized returns and outsized innovation over the next few years. And that's where we spend most of our time. I'll maybe just give a few examples. So kind of in my world of the infrastructure, I spent a lot of time in identity. So we really believe that identity is, the way to transact online, the future of payments and activity and transactions online. And it is super important to make sure that you're able to verify and authenticate the customer, whether it's a consumer or a business, but at the same time, enable a very seamless customer experience. And there's always that imbalance between wanting to secure the activity or the transaction and providing the customer on the other side a really seamless experience. And so we're constantly looking for new innovation there. And actually one of our previous companies from our portfolio at American Express Ventures was a company called BioCatch. It's an Israeli company. And what they do is they look at hundreds of different parameters about how a user interacts with their device, like how quickly do they fill in information, how familiar they are with their own information and the website. And that really allows them to figure out if that customer is a fraudster or it's a kind of genuine customer without interrupting the customer experience. So that's kind of like an example of an investment that ties back to one of our thesis areas. I'll pick another one in kind of the B2B fintech space. So we've been spending a lot of time on embedded financial services. So how do you actually embed financial services into platforms that might have nothing to do with financial services, but they're servicing a specific category. Kind of in the vertical SaaS, for example, we have a specific operating system for a specific industry. And that operating system is interacting with the customers on a daily basis. They have all the data about the customers. And so they're actually in a really good position to also provide financial services. One example from our previous portfolio company to kind of help bring this to life is a company called Toast, which is essentially an operating system for restaurants. And restaurants can manage anything from kind of inventory to interacting with customers on their platform. And basically, because they are so familiar with the restaurants and have all the data points and are, basically in kind of day-to-day relationships with the restaurants, they're in a really good position to also provide loans. And then kind of lastly, one more from our consumer fintech. We've been spending a lot of time on kind of the wealth management space and how do you basically provide access to alternative assets and how do you almost democratize it. And, we think there's a lot of investable income out there that's looking for interesting places to lend. And, one of our, actually Julia's last investment and the last investment in the fund was in a company in that space called Equity.
And you guys invest in both US and Israel. I think it's obvious, for me at least, I don't know if for everybody, why Israel? I think it's one of the leading tech hubs in the world, and there's no doubt about that anywhere. But it allows you to see two different kind of views, two different of the strongest markets in the world, basically, when it comes to technology, I think. How does that look like, the work in Israel? And on the fintech side, Israel is, how strong is Israel on the fintech side of things?
Yeah, that's a great question. We see Israel really as an extension of the US market in a sense. A lot of the companies in the US, in the Israeli market are targeting the US as kind of, their main market, and are essentially competing for a market share in the US. Like you mentioned, Israel is, well known for being kind of, a tech hub. And it was, throughout the years, super well known for cyber, right? Like cyber nation, number 2 in global funding in cybersecurity, right after the US, one of the largest exporters of cybersecurity. And the interesting thing that actually has been happening over the past few years is actually that growth in the fintech space. And last year, fintech was really close behind cyber as the second largest sector in terms of funding, almost surpassed cyber for the first time. And, it's been happening from basically different reasons. I think we're seeing a lot of multinational companies and financial institutions that have moved here to Israel and opened innovation centers and hired a lot of talent here. And so there's a lot of expertise that basically is coming to Israel. And then the other thing is we're seeing a lot of serial founders that are actually starting kind of their second, maybe even third fintech company. We're seeing a lot of fintech companies that grew to unicorn status and even went public. And that, again, a lot of expertise, a lot of knowledge that's being built, and a lot of people from these companies that are then going and starting their own companies in the fintech space. And lastly, I would say, I think a lot of founders are coming out of the military with a lot of talent, great skill sets. Usually they went directly to solve a problem in cyber or in data. But now when they kind of go through the ideation process and kind of thinking about what is the next problem that I want to solve, they're actually understanding they can apply their skill set and talent to other markets. And when you think about financial services, kind of the addressable markets are huge. So we're talking about hundreds of billions of dollars and trillions of dollars, depending on kind of what sector you look at, but it's really humongous opportunity. And so that's why we're seeing more and more of that. And, kind of thinking generally about Israel and why we're so excited about being here. Obviously, the kind of secret sauce of all the talent that's coming from the military is definitely, intelligence, Unit 8200, which I spent a long time at, but not only, there are a lot of great units. And I think the kind of common thing, aside from, maybe you get technical skill set at the intelligence unit, but in general, that kind of culture of, there are problems and you just have to figure out a way, like you have to find a solution. There's no taking no for an answer, and kind of that informal culture and, always having like pushing to have some contrarian view and all of that kind of mixed together with really great incentives and programs from the government, high spend on R&D, just gives you a very, very unique ecosystem, and we're super excited to take part of it. Mm-hmm. The last thing I would say on kind of, the Israel side is that our value prop here is really, really strong. So the number one thing that founders in Israel need help with is commercialization in the US. How do you bridge that gap? How do you get to the right person in the right financial, when I'm talking about fintech, for example, the right person in the right financial institution? How do you get to a pilot? How do you get to commercial engagement? How do you put together a strategic partnership? That's always hard, but when you're overseas, it's much, much harder. When you haven't worked in that industry, that's like twice as hard. So I think, having us to support the founders through that journey is super meaningful and helpful for us to provide value to the founders and them to,
And as a families know, we bring lots of Israel's innovation into our conferences, like Ori Levin from Waze and Dov Moran that invented the flash drive, and the Godfather, Vardy, of course, and next week in Israel, Gal Bardia, that works with Amnon Shashua, I believe, with their digital bank, first digital bank. So how do you find and win the deals?
Since I'm talking, I'll just I'll keep going for this one. But basically, we probably see thousands of companies a year. We actually are on track to meet and spend time with qualified meetings with over 700 companies this year. And this is it's a combination of outbound efforts and inbound efforts. So by outbound, us proactively reaching out to companies, we kind of go through and scrape data from all different data sources like PitchBook and CV Insights and LinkedIn, and then try to look for companies that are in areas that we, we're interested in, and then we reach out either cold calling them or through our network, which is usually the preferable way. So that's one side of it. We also go to events, obviously, like everybody does. Joya was just on a panel yesterday in a large fintech conference in New York called Finovate. So that's a really great way for us to, to kind of get some exposure and meet companies. We also are very close to universities, incubators. We like to meet companies early on. Now, the other side of it is kind of the inbounds that we get from our networks, which is kind of the majority of, of companies that we see. And this is a combination of VCs that are sending us deals to kind of co-invest with them, angel investors and founders. That would kind of the most meaningful from, a piece of that network. So basically, if you think about our history and track record, we've invested with hundreds of VCs. We've been, we've met thousands of founders. We have really great networks and people who actually know the value that we can bring, our expertise. And then obviously what Lindsay was talking about, all the doors that we can open and kind of the hands-on business development help that we can bring to their portfolio. And so we actually have investors that, the value that, and they want to have us kind of be on the cap table with them. And we have a lot of founders that kind of are great references for us and send us really, really great deals. And then, how do we win deals? Lindsay kind of talked about the letter of intent that we put together. And really throughout the evaluation process, when we meet with companies and do our due diligence, we try to validate as much as possible through our network, the problem that they're solving, their approach, their solution, the team. And so, kind of another byproduct of this process is that they're actually meeting a lot of potential customers, advisors, partners, and really they see the power of our reach and the help that we can provide even before we invested. And that kind of really helps us get into deals. And then the last thing I'll note, kind of obvious, but we bring diversity, to the boardroom. We bring diversity to the company. A lot of companies are, interested in that because they understand the value of having different people around the table that, really push for creativity and different thoughts around the table. And so I think, that's also kind of something differentiated that we have in the industry.
And what's your plan for your portfolio construction?
I can take this one. So, we're not trying to reinvent the wheel of what we've done for the last 10 years for our inaugural sort of independent fund, right? And so we're targeting a portfolio of roughly 20 to 25 companies. We like relatively concentrated portfolios because we are very hands-on with our portfolio companies. We like to think that part of the value that's generated is us tipping the scales in favor of our portfolio companies. And, we really want to work with them and impart our expertise through. So we think that portfolio companies we can manage. We're predominantly seed and A investors. We'll selectively do some B, but not really a focus area. For us, we left that in there as companies sort of we've invested in previously, and Amex start to stretch into their B and would still return like an A. We would selectively do those. So that's the portfolio construction. And then we do plan on having 45% reserves in the fund to double down on investment, triple down on investments where they'll generate outsized return for the fund overall. We think reserves are important. We've seen that in our previous portfolio and experience. And on a fund level, if you park it in the right place, which is the benefit of having first check in an earlier stage, you can really amplify fund returns. And yeah, that's what we plan to do.
And by the way, I'm multitasking here. You don't see that because I'm so professional. But no, I get a question here on my phone asking, what's the size of the fund we're looking at? And,
yes, that's a good question.
And what would be the minimum investment? Or
that's a great question. Size of fund, obviously very important. Like I said, we tried to mirror what we deployed roughly in 5-year periods at Amex for the last 10 years. So we deployed 120 million of actual capital out the door in investments. And so at a full fund size, we're targeting 150 because, fees and whatnot on top of that.
And what investment have you made so far? And by the way, you made investments so far. Is that from your own private wealth? Is that some investors already joined you? So what investment have you done so far, and why did you invest in these particular companies?
Sure. I'll go first just while I'm still talking. We did have initial close of the fund. So in Q1, we closed a fairly substantial chunk of the fund already, and we're actually holding last close of the fund at the end of the year. So we're actually towards the back end of the 150 that we're targeting, just as a framework of progress. So we were able to do some investments out of the initial chunk of capital. So these are fund investments, which later joiners would have privilege to access in the final close. The last investment, we'll do it in reverse chronological order. I think Dana already preluded to the last investment we did. It was a company called Equi. This company was founded in 2020 in San Francisco, and it's an alternative investments platform that allows accredited investors today to access non-correlated portfolio of alternative assets, right? Eventually, they want to work downstream and to sort of retail segment. That obviously takes technology. Really, it stems from one of our thesis areas, which is self-driving finance, that both applies to the consumer side and to the B2B side for Lindsay, right? The idea that automation, technology, AI, and the data that's available really should enable you to automate a lot of your financial management, and the stack within that in terms of back-end administration application should be simplified enough to democratize like previously inaccessible segments to now be accessible. So that's the broader thesis across the two segments, consumer and B2B, that we have. And then obviously this is a stake in that also overlaps with alternative investments as a critical factor for wealth accumulation and preservation, right? I don't have to probably mention it to this audience, but ultra high net worths have somewhere between 50 and 54% of their total assets in alternatives versus sort of affluent investors at 5%, if that, in this category. And it's because you understand that drawdowns are a massive hit to your generational wealth over time, right? And so this secular shift to alternative assets being the most significant consumer fintech opportunity in wealth tech, with assets under management sort of like basically, depending on which numbers you look at, either doubling or tripling in the trillions over the last 10 years, and then into the foreseeable future, still representing double-digit growth, kind of makes your heart pound as a venture capitalist. But that's really expected to spread downstream and be enabled by technology. And so that's the thesis behind Equi. But the specific part about Equi that we liked in amongst all the platforms that we evaluated as well was their diversification offering, right? Unlike other platforms that offer like a single exposure to an alt fund, Equi's philosophy is to provide diversification to negate drawdown and manage liquidity through liquid alts. So there's the initial sort of temporary moat. So relative to other models that, specialize in one venture fund or, where you can't really assess the quality, they really go back with the data-based approach, which again, liquid alts provide. And we're at a special point in time where liquid alts, come to the forefront of the education mindset as well in that sector. So that's one. Again, they have a information database moat, built, database of over 11,000 managers to select from, a lot of like data gathering that's proprietary to them. Again, that's the initial moat, an initial wedge into this industry. The bet really is on the back end infrastructure. The more enduring moat will be the company's plans to leverage regulatory structure provided by interval and tender offer funds to enable investments downstream, accredited investors, and eventually retail investors. And to do this at scale, they really need to build the full vertical stack to enable this product, custody, brokerage, ledger, workflow, payment orchestration, reconciliation, accounting, reporting. That's what we're super excited about over the long term for this company. So we just closed that over Labor Day. Really excited to leverage our network in asset management, wealth management platforms to expedite their growth.
I'll chime in with some info on our second investment, and I'll just note Equi is EQUI. If you guys want to check it out, it's equi.com, so EQUI.com. The investment I'll talk about is called Coast. Website is coastpay.com for those interested. This is from our B2B sector, right? The bet here is in the thesis that Don alluded to earlier, the sort of vertical stack, vertical financial operating system for a certain industry. So Coast is a fleet and fuel card provider. This is a massive industry that almost no one knows about. It's dominated by two large public companies, FleetCor and Lex. They have a combined market cap, depending on the month, somewhere between $40 and $50 billion. Plus there's a long tail of kind of other old school competitors. What fleet and fuel cards are is if you run a business where you have a fleet of vehicles, anywhere between like 5 and hundreds of vehicles, you need to equip your drivers with a credit card to go fill up the tank, right? Make roadside repairs, pay tolls, et cetera, et cetera. But the employees that you're often giving those cards to are, low paid, high churn employees. You don't necessarily want to trust them with a full-fledged corporate card because they can go into the, convenience store and buy, soda, gum, candy, et cetera, et cetera. So essentially fuel cards are a super controlled credit card product that enables fleet-based businesses to equip their employee base with controlled cards. Old school industry dominated by these two players, massive industry, time for a refresh, right? And so Coast is coming into this industry with a digital first product. They have a platform that enables business owners for the first time, not to just have a credit card, but have an accompanying software platform that enables them to log in, understand their business, permission cards, see who's defrauding them, see which gas station they should be spending on. We think this is a compelling opportunity for a couple of reasons. One, massive market, right? Just a need for a refresh with old kind of players dominating today. Second, incredible founder market fit here. Daniel Simon's the founder of Coast. He previously founded a company called Bread, which is one of the original buy now, pay later companies, credit-based underwriting product. So amazing background to bring to this new segment. He exited that business for over $500 million to a financial services company. So great background. We think, in this market, because it's so big, if you can just do it a little bit better than the previous guys, that's a massive opportunity, right? Like that in and of itself is a multi-billion-dollar exit. Where we see real opportunity here and what we think makes this like a potential 10, 20x kind of investment for the fund is this vertical software opportunity, right? As we did diligence on this company and we talked to fleet-based business owners, landscapers, plumbers, et cetera, it became clear that their fuel card is like the lifeblood of their financial part of their business, right? They have an accountant who handles stuff in the back end. They don't really use anything else. They have a personal credit card, and then they've got their guys using fleet cards, and it's literally how their business runs. We think that creates an amazing wedge in to become the financial lifeblood of these companies, right? So start with that critical thing that's helping them run the business, get engagement through a digital platform, learn more about their business, and use that as the wedge to start introducing more financial services products to those customers through a trusted platform that they're already using, right? Vehicle financing, vehicle insurance, core accounts payable automation, et cetera, right? And so to us, becoming sort of the vertical stack for fleet-based businesses is where this business is going. This is an investment we're really excited about. We're co-invested with funds like Insight, Bessemer, Excel, and we're thrilled to be part of that one.
And what's the minimum investment again?
It's Coast. The website is coastpay.com.
The minimum investment in your fund again, you mentioned that? Yep,
this is out of the fund.
Okay. And Dana, you had
I was gonna talk about our actually third investment, but it's our first investment out of this fund, company called Cyrus Security, and that's CYRUS.app. So it's a consumer app. Basically, what they do is consumer cybersecurity and identity theft protection. And kind of looking at the space, identity theft is on the rise, fraud is on the rise, kind of ties back again to our thesis in identity. And there's really not a lot of innovation in consumer security. So we're seeing a lot of cybersecurity solutions for enterprises, but consumers are kind of left out. And there's really an interesting opportunity to disrupt the kind of multi-billion-dollar LifeLock dominated industry in the US. And we really like this investment for multiple reasons. Aside from kind of the market opportunity, the team is top-notch, ex-Unit 8200 in the Israeli intelligence, so cyber experts that are kind of the best team to build this product. The other thing is this is a very holistic solution, so they protect your online identities, your financial accounts, so bank accounts and credit accounts, your social media accounts, like Facebook and Instagram, and they do that across all devices and also provide you with insurance. So, we think this is a really massive opportunity. I will note, like they're, initially to build out the product, they're going kind of direct to consumer, but now the main opportunity and where the kind of focus is after the app and solution is completely built out is to go through financial institutions and distribute that to their consumers and their employees. And so this is, there are now actually a bunch of really interesting POCs with large financial institutions. And this is also where, we add value. We actually put them in touch with these financial institutions and help them get these POCs up and running. The last thing I'll say is here we co-invested with funds like Resolute. IMEX Venture is also an investor, and they also have a bunch of kind of super angels from this cybersecurity and consumer space. So folks like Shlomo Kramer, who's, you mentioned Checkpoint before, so one of the founders there, and obviously, kind of a serial entrepreneur and investors. They also have Bill Ackman and as well as Dave Gubo, the founder of Warby Parker. So really interesting kind of set of people around the table.
And so those are all basically our questions here. My question may be blockchain. Do you guys invest in, Julia, I got some tough questions for you on blockchain, but blockchain. Do you guys invest in blockchain as well? Blockchain, fintech related.
Julia, you're on mute, Julia.
Very strategic mute. I knew the tough questions were going to come. Thank you for the layup. So blockchain, what we do in blockchain, let me explain that a little bit further because we get this question quite a lot, right? We are not a crypto Web3. We used to be blockchain and crypto and the Web3, now back to blockchain again, fund. That is not what we do. The investment we made in this area, one in Abra, you mentioned earlier, way back in, I think 2015, we did their very early stage in Abra. And then we wrote another check in 2019 in a company called Falcon X, that's now latest valuations, 8 billion.
When you say we, by the way, Abra.
This is an MX Ventures. That's right. That's right. And so we evaluated a lot of opportunities, saw very early on that blockchain has a lot of potential to automate and create efficiencies in financial services. And the application wasn't so readily apparent, so wanted to take early bets. I think a thesis has evolved over time that it's more of a digital asset play, right? And what could be more digital an asset than money and equity and all of those things that underpin or financial services flows. So that's where we're targeting. So things that use blockchain and that integrate to core ledgers and things of that nature to make financial services more efficient, more transparent, and more able to be utilized in effect, then going to layer one, investing in layer one, investing in tokens, investing in sort of Web3, NFT, all of that sort of stuff. Couple of reasons, obviously. A, we don't have the coverage to assess that on an expertise level. You can do a whole fund on that in itself, and we may not rule that out for the future, but that's not where we are right now. We're staying close to home. The way we recognized opportunities in Abra and FalconX was the application of closer to home projects that tokenizes digital assets, that brings it on chain, that just makes efficient processes better.
And so just to summarize this, because I have another question about blockchain, regardless of your fund, which is interesting to hear your opinion. But to summarize our discussion here, as you all know, this session is being recorded. So those of you who couldn't attend and don't know it yet, but we'll send you the link. And also those of you that have and want to see this again, as well as the contact info to speak to you. And we understand you'll be closing the fund very shortly. And you're already, most of the fund is already there. So if people have any further questions, they can reach out to you directly and take it from there. Okay. And maybe just my last question, because we did a lot with technology at our events regarding the blockchain side of things. It's interesting to hear what you think about where the industry is headed, because at the beginning, I mean, the entire industry promised us things that one by one, they said, oh, we didn't mean that. So, they said, they talked with us about stable coins. They talked with you about the coins being a separate asset that's not touched by the market. Oh my God, how it's touched by the market right now. It's worse in the market. They talked about smart contracts that you can sell real estate in pieces. That's not happening yet. They talked about micropayments to the poor people in wherever in the world. That's not happening yet because the discovery is not fast enough. And a lot of the promises, and then they were preaching to take out the mediators, that the banks are evil and all the financial system is worse, and they take crazy fees, but then you find out that when you buy Ethereum, and by the way, we had the founder of Ethereum, one of them from Toronto, speak at our event just recently, you find out that you're still paying high fees, just not to the bank, you're paying it to others who are in the blockchain hat, but they're taking the crazy fees. And a lot of the promises that were made, let's take the mediators out, we are so amazing. And then you saw stablecoin, oh, but stablecoin, you didn't check it right, Alice Mashinsky, I can go on and on. So, so people say it's an early industry, it happens, falls, it will grow, you don't have enough supervision yet and we're working on it. But do you see that as a technology that's here to stay and actually change the world? When I speak to Microsoft and HP and they speak at our events and they have the people that are in charge of the development in blockchain and everything around it, they tell you we work on CRM systems, on supply chain systems, all based on that. But all I'm saying is that at the bottom line, the only thing, and maybe many people would shoot me for saying that you see that works is actually maybe Bitcoin as a coin that people trade, nobody using it, but as a tool that's being traded, it does work. But that's basically from all the big promises of the industry, what we're seeing. NFT, even the people in the industry don't get, but others do. But I'm trying to figure out, what do you think, as somebody who's seen that space from the fintech side, where do you see that industry going?
So,
and I just lost half of my clients right now that are in the blockchain space. But it's just a question to see, being devil's advocate to try to figure out where that's headed.
This is my view, and so it could be, I'll preface it with that. My view is this: I do think that the technology behind it is very, very powerful. It's an automation tool at the end of the day, right? And that's what technology was meant to create, for industrialization, right down to now. And so the application becomes very, very important, I think, to your point, Danny, which is why we don't do layer one tokens. We're kind of like, okay, how do you even price that? It's all speculative, and there are 60 different methods to price it, and none of them are based in any fundamental value whatsoever. So we don't do that. That's not our background. I was trained at Goldman investment banking, Lindsay at Morgan Stanley investment banking, consulting. We want to relate it to real world use cases. And we do think that it's beginning to show where those things are. And for what it's worth, I do think application for stable coins will emerge. It's the first asset to get digitized. Equities are coming next. The asset management industry are probably the closest, in my view, to getting adoption on blockchain, because equities easily are tokenized and and provide liquidity, and then can be staked and linked to actual underlying assets, and utilize DeFi protocols to actual representation of assets, but it just provides more efficiency in the system overall. So I do see that coming into the fore, but there are limitations to what decentralization means. And I think we as a firm don't necessarily believe a fully decentralized network is the way to go for financial services, right? Because fraud, AML, all of these things, you can validate the transaction, you can't validate the player. You're kind of in no man's land for financial services. So it's a long ride, and we've seen that in our space too. We've been at this for 10 years. By no means is that the whole history of venture capital, but we've seen it takes companies a long time to get to fruition. It's not like yesterday was like, oh, this happened, and tomorrow it automatically becomes crystallized and easily recognizable as the company that it's going to be. So there's a journey, but from a macro perspective, we're bullish on the underlying premise.
And maybe my last question to you guys is, how did COVID affected valuations in your industry? I mean, I would assume that things are even higher now. I mean, people were forced to use more online financial methods and learn more about technology. But did COVID affect the valuations in the industry, or not really?
COVID, I would say COVID, everyone stopped doing deals for about 3 months, and then they just accelerated out the back of that. So 2021 was just, in our view, was just like overhyped. We didn't do deals in 2021. It was time to harvest, time to go on fundraise and build the next chapter. Kind of didn't know what the timing was going to be, but it was getting super, super frothy in 2021. And so, again, I hark back to, we said no to all the money that was on the table because we thought that was short-term money in terms of hiring us into growth funds. That's not where we wanted to be. We wanted to stick to what we know and double down on what we know when the next cycle came around. So what's been more impactful, obviously, in the latest cycle is inflation, stock markets coming down, public markets coming down, reconciling the froth that's been generated over the course of COVID, inflation rising, a lot of money's been popped into the system. And so we are seeing valuations pull back. We're seeing deal volumes pull back. And so between value and volume, somewhere between 30 to 40%. And that's great for us. We love being in the position that we're in. We don't have a back portfolio to reserve for. We can start deploying in this cycle, which is the optimal case of what we planned for. I will say that there's a lag effect. And so on the fundraising front, things are also like, LPs are looking at us and going, okay, fintech, where's it going? Not recognizing this is actually the cycle to really deploy. So, it's a double-edged sword, but we feel very good because we closed a chunk of the fund that we're able to deploy in this environment. And I honestly hope that prices stay depressed for a while. And we see founders who are not looking at, we call it founder careerism. You know, I ideated this idea, a week ago, and I got $5 million to go and figure it out on somebody's dime. We want to see less of that. That was 2021. We want to see real founders who really want to solve problems, who know how hard it is to get $1 million, let alone $100 billion come to the market.
Well, thank you very much. We stayed over an hour because really I had a couple of questions that I thought I wanted to hear your point of views on beyond your story. It's been great, and I hope to see you at our in-person events in November and next week in Tel Aviv. Just to tell everybody here, next week we're doing the Tel Aviv Institutional Investment Conference, and then the next day the Family Office Conference, and in November, God help us, November 3rd, New York, November 8th, Chicago, Sam Zell will be speaking there. November 22nd, London, Sherry Blair will be speaking there. And November 28th is our pre-Art Basel Miami Fund Conference with loads of great speakers. So where, by the way, the head of commodities at Bloomberg would speak about the future of, as they see it, of fintech, of blockchain, of many assets. Thank you all very much for being with us today. And we will send contact information to everybody here later on. And we will take it from there. So thank you, Dana, Julia, and Lindsay for being with us.
It was a pleasure.
Thank you so much.
Pleasure.
Thank you, everybody.
Bye-bye.